foreign currency trader who's using futures. Forex traders, that's one of the neat benefits that's provided for you. It's kind of as you pay the difference, which is called the PIP. We'll get into that in just a minute. It's a pay-as-you-go type of methodology, and it's a better preferred way for most investors. That if I'm right in the market and I'm paying as I go along, I'm also getting the quotes and charts and getting the order entry platform along with that. So trading Forex has these benefits with it. As I just mentioned, Forex trading has no real commission, so to speak, and I quote that because some Forex companies will have you go straight to a interbank dealing desk, straight to the interbank market, and you'll pay a PIP, which is the difference between the bid and the ask, the offer, and also a small commission as a service fee for bringing you straight to the interbank market. Other foreign currency markets have what's called a dealing desk, and they are taking the other side of your trade. So when you buy, they're selling, they're lining up, matching those trades. And so some people feel that there could be a chance that there could be a wider spread involved than what is in the true marketplace. And quite frankly, depending on what bank each one of these interbank dealers go through, whether it's the big banks with JP Morgan or whether it's with Citibank or whoever the banks are, the bottom line is this: you're being brought to a foreign currency marketplace, and unless you're trying to scalp for 1 or 2 pips or points, then you're missing the real essence for a speculator. A speculator is looking for probably a little bit more of a swing in the market move, possibly anywhere from an hour to possibly 24 hours of being in a trade, and you're looking to capture hopefully a large percentage of the average daily range. If, let's say, for example, in the euro currency, we have an 86 pip average daily range, at least over the last year through 2005. If you can capture just 60% of that range, you're talking close to 50 points a day. 50 pips is not a bad way of making money. That would be on a full-size 100,000 lot contract size, $500. So by using the foreign currency, it's a pay-as-you-go methodology of buying. You're paying the spread, and a lot of these spreads are really coming down now. So that's one of the neat features for foreign currency, another great feature for Forex traders. Now, futures offers transparent pricing, and I'll show you what that means at the end of our presentation. In fact, a really neat thing that we're going to borrow some of the information from futures and apply it for foreign currency trading. But one of the things about foreign currencies in versus the futures is that where futures, what I mean by the transparent pricing, we get to see on these platforms the bids and the asks, what the size, how many contracts are below the market looking to buy, how many contracts above are looking to sell. So we can see the depth of the market. They call that the dome. Another thing is that in the future, some of these platforms, and this is what I want to share with you, and I want you to really take this with you, is that they will be able to identify by either a blue or a red dot, and you can change the color on some of these platforms, where you enter the trade to help you track your performance, whether you're anticipating signals or whether you're acting on the signals. That's an important feature because I think that it's one of the exercises that I even talk about in the trading course, to print out a chart as you trade and then go back and see when I bought it, what price and what time, timestamp it, mark an X on your chart, and then you can better track your performance. Did you act on a real signal? Did you guess? Did you anticipate? Did you not trade the system correctly? And you'll be able to go back and pretty much get a progress report on how you are as a trader. Now, the futures does that. In the Forex, you can do that too, so you can monitor your progress by using some of the techniques that we use in the futures markets. Now, futures does not give you the free trading, so to speak, by bids and asks as they do in the Forex. In fact, one of the ironic things about futures is there still is a bid and the ask. You'll never be able to get in right there at the market without looking at, again, buying the offer. You're buying the offer, you're selling the bid. Generally, with any market, it's just like with buying a home. There's an asking price, and then you're a buyer coming in probably underneath the asking price. With the Forex markets, you know there's going to be a specific spread difference if you want in. You know what you're going to pay every time. You know what you're going to sell each and every time.